Good morning, ladies and gentlemen. Welcome to the show. Listen, glad to have you guys here. Now, I'll tell you, the focus is back again on Italy in the news. You know, Italy's a huge problem for the European Union. And, the Brexit could be coming back around again pretty soon, too. And it's a huge problem in the European Union. Let's get started and let's look at all the markets today. And let's start the charts right here. And let's get right on it. And you know what? Silver's and gold's taking an unbelievable smash today. Silver down 26 cents. $14.29 is the price. And I was watching this morning and I saw that little tiny flash crash and I said, hey, what's going on? And then it fell off of a cliff. Let's take a look at gold. We see gold is down today too. $12.78, down $6.30. So, the suppression continues. Let's take a look at cryptocurrencies this morning. And, we're seeing the price, rise and rise and rise on cryptocurrency. And each time it seems to rise, it doesn't seem to be falling back, really. It seems to be just holding off for a few days and then rising again. I think we're in a bull market, to tell you the truth. I can't see any other solution to this, except we're back in a bull market again with cryptocurrency. $272 billion market cap, actually $272.6 billion. Let me just refresh the page. $269,450. So you can lose $1 billion that quick. Just in the last 5 minutes since I had this page open. Bitcoin dominance of 56.9%, and we're seeing the prices of these coins have moved up a lot. Ethereum's $267, XRP's 42 cents, Bitcoin Cash is $431.20. EOS is $7.79, Litecoin is $113, Binance is $33, Stellar is 13 cents, Cardano is 8.7 cents, Tron is 3.3 cents, Bitcoin SV is $117, Monero is 96 bucks, and Dash is $163.90. Let's move on and take a look directly at Bitcoin and the charts. We can just see a steady path upwards. And, the long-term moving average has changed direction just quite recently, and that's one of the things I look at as an indicator. Let's take a look now at the Dow Jones, and we're going to refresh the page, and we're up 112 points on the day. It just sounds almost like deja vu from yesterday, to tell you the truth. Anyway, we're up 112 points on the day, 25,698. Now let's take a look at crude oil. And crude oil is just drifting along level at the same price, There's a lot of tensions in the Strait of Hormuz. And that's a real tight little area where the ships come in and through there. They have to get through that little tiny strait, And it's where an awful lot of the world's oil passes through that tiny little Strait of Hormuz right next to Iran there, and there's a lot of tension in there, and there's gathered forces. The United States forces are gathered in there, and they're bringing in 1,500 more troops into that area. Let's take a look now at U.S. Treasuries. And what we're seeing now is we're heading even deeper into the yield curve inversion. The yield curve inversion is all the way out to the 10-year. It's strong, it's a solid yield curve inversion, and it's trying to engulf the U.S. 30-year as well. And it's moving toward the 30-year. The 30-year's moved 3 basis points lower today, 2.72. So this yield curve inversion is progressing. Let's take a look at the U.S. dollar today. 97.73 on the U.S. dollar index. And we see it's been in this territory for a long time now, between 96 and 98. 97 being the center of that range that it's been in. And it hasn't really been going up or down too much. It's been staying in mostly around 97 for quite a long time now. Now let's take a look at earthquakes. Let me center the chart here a little bit so we can see a little bit better. I'll have to pull the page down a little bit. There we go. Okay, so we see there's 2 earthquakes off of the coast of Peru today, but they're small, 4.6 and 4.7. Nothing much in America except the usual quakes we get out around California. The people in California, you know, they're absolutely used to it. They feel the ground shudder a little bit underneath them, and they just go back to work or go back to eating their dinner, you know. They feel a little rumble. One of these days, California is going to get the big one, you know, the big one. Up here around Alaska, they get quite a little bit of tiny little quakes too. But the United States is clean so far today for earthquakes. Let's take a look at the United States for diseases. Pretty much clean, except for maybe an isolated case of hantavirus. Let's see. Now there was a case of meningitis in Texas. And what's this one? Canine bellucis in central Iowa. So there's nothing much happening in the United States for diseases. But now, you know, if we go over here to Africa and we go into the Congo, there's Ebola. And in the Democratic Republic of Africa. And yesterday it was running around 1,800 people. Now it's 1,912. There's more people have it. And they've killed one of the people who work on trying to stop the Ebola. The African people have killed a person, a care worker, one of the people that works trying to stop the Ebola. And they've raided a clinic and they've tore everything to pieces, you know, which is making it much, much harder to fight this for the World Health Organization. And so there's like 70 million people or something in the Congo, tremendous big population. And so far, if you take a look at the tiny fraction of the people that live in the Congo that actually have this disease, which is like 1,912 people, and you compare that to the population of the Congo, which is about like 70 million or whatever, it's only a tiny, tiny fraction of people that live in the Democratic Republic of the Congo that actually have this disease so far. Now, it's a threat. This disease is a threat, and it's making it harder for them to get it under control. The fact that it's in a war-torn area and there's strife going on, you know. Let's take a look now at U.S. Treasuries. Treasury yields on the Italian budget. The Italian budget crisis returns with these are the treasuries I'm looking at. Italy. I'm looking at Italian treasuries. Let's take a look here at the Italian 10-year. And why this is important is the Italian system is completely over-leveraged. I mean, it's bad. It's bad, folks. Italy's bad, and Italy's big. Did you know, I didn't know this today, that you know how big India is, big country India is, and Italy's got pretty much as big a budget as India. We're talking not small here. We're talking a large chunk of the euro here is in Italy. The interests in Italy. And to make it worse, France has lent Italy an awful lot of money. Enough money where if Italy can't pay France back, France basically goes down too. You see the gravity of this situation? So now we're looking at the Italian bond yield of 10-year, and you say, well, why is this important? Well, I'll explain to you why this is important. The Italian banks are getting their funding now, basically, from these Italian bonds. They're basically funding the banks, and if these Italian bonds go too high, if these yields go too high in Italy, they won't be able to fund these dead banks. They're basically dead zombie banks in Italy. The banking system in Italy's dead zombie banks. The Italian budget, they're way over budget and everything. They're like, what does it say here about them? Let's take a look here about Italy, and it's just terrible. It's a terrible mess. The sinking Italian economy is on the tip of an iceberg. The economies which were once reckoned as strong pillars of the European Union are now on the verge of erosion. Third largest economy in the Eurozone is now a sinking ship. This is Italy, a sinking ship. The Italian economy is 10 times bigger than that of Greece. further alluding to the intensity of this economic crisis. And what got me was, as I was reading this article down here, it says that that the Italian debt is around 130% of their total GDP, and it's $2.6 trillion. $2.6 trillion. It says almost the same size as the Indian economy. So it's almost the same size as India, you know, in nominal GDP terms. 10 times bigger than Greece, and it's intensifying. This is creating a systematic risk for the entire Eurozone as a whole. Can you imagine? And so they don't know what to do about this. Basically, all they're doing now is at this point, look, they're saying, whom should we blame, and so on, but they don't really know what to do. It says, if not contained, it would shatter the market confidence in the entire Eurozone, putting the European Union in big trouble. But now we have the other side of this coin. How are they going to contain it? It says, if not contained. Basically, right now, they're just shuffling their feet. They don't know what to do, and they're just basically sweeping Italy underneath the rug and trying to ignore it, what's going on in Italy. But if not contained, it would shatter the market confidence in the entire Eurozone, putting the EU in big trouble. And this goes exactly back to what I've been saying, that the center of the crisis is going to be in the Eurozone. This is going to be the center of this world crisis that's building. It's going to be in the Eurozone. Now, that doesn't mean that all these other countries around the world are not going to feel the pain. It's just that they're not going to feel the pain as intensely as the people who live in the Eurozone. And this is because when the fiat currency that is the euro was put together originally, it was not well thought out. And now they're reaping the repercussions of that. The fact that they tried to make one currency for the whole Eurozone, and it's just not working. And now they're yielding the repercussions down the road from that. And Italy is the first, like a keystone that's breaking away, and the keystone holds the whole building up. And they're basically seeing the cracks in the keystone. They're seeing that Italy start to break away and and they're starting to lose confidence in Italy. And as investors lose confidence in Italy, it's transferring into their treasury bond. Let's take a look once again at the treasury bond of Italy. It's rising. Now this means bond is falling. And bonds have an inverse relationship. So if the price of a bond is rising, that means that the bond is crashing. And so basically today we're seeing it going almost straight up. The yield on the 10-year here on the Italian bond. You can see the effect here. If we look back to March, we can see the effect of the European Central Bank sneaking in there and purchasing $41 billion worth of Italian bonds. Look how they drove it down, you know, and the crisis went away for a while. You see this peak right up here? That's when they started buying, and they bought it right down to this level right here, and then everything was quiet about Italy for a long time, and now all of a sudden, boom! The bond yields are starting to rise again. That means the money's wearing off. Italy has went through $41 billion from that period of time, let's see, from around March until now. They went through $41 billion. It's a money pit. The more money you pour in, the more leaks out. It's like a sieve. You can pour water into a sieve all day long, but the water's just going to run right out through the bottom of the strainer. And that's what money's like, pouring money into this situation to try to stop Italy and the problems in Italy. Listen, thank you guys for listening to this market report, and we'll catch you guys very, very soon again. And you guys have a great day. Bye-bye.